Hi everybody, this is Paul Cooper with Totes and Notes. It's currently August 29th and I'm bringing you this week's Market Meltdown. So let's get started. Our first article comes from Zero Hedge and it talks about how Facebook had an engineer that admitted to tearing down posters welcoming Trump supporters. And the whole article goes on to show how there's a very strong left-leaning bias in social media and how they go and cover up conservative and basically anything that's not left wing, thinking they're gonna cover it up, and so it's not good. Everyone's kind of been suspecting this for a while, and then Facebook, Twitter, and all the other social media giants say it doesn't happen, but the facts are showing that it does. So it's kind of interesting. It doesn't really matter what side of the political spectrum you're on. If you believe in free speech and free markets, this should be a fairly troubling piece of information. Our second article from Zero Hedge is again covering our boy Elon Musk. Let's see, it was a month or so ago when the whole soccer team in Thailand that was trapped, and he got into this huge spat with the guy that actually helped save some of the kids and called him a pedo guy, indicating that he was a pedophile. And so it looks like that guy's actually going to sue for libel now. They hinted that he might, and then Elon kind of gave this half-assed apology that he was sorry. I wouldn't blame the guy. I mean, Elon's absolutely lost his mind, and you don't want to be accusing people of something heinous like pedophilia, if unless they are, and plus he's a billionaire. What was he thinking? So this is just more of the good old Elon Musk watch. Have your popcorn ready. All right, for our last article on Zero Hedge, we're talking about housing and how it's slumped for the seventh straight month as overheated real estate markets start to drop. So we've kind of talked about this in the past few weeks, that the real estate market seems to be softening and cooling down. We've talked about how it is, what's going on here in the U.S. We've talked about Australia a little bit, and it looks like as a whole things are slowing down. Home builders are slowing down. Home sales are slowing down. So, we're probably due for a pullback. So if you're looking into getting into the market, just be really careful that you're buying something quality and not overpaying for it. All right, from our next article, we're going to DS News, and it's talking about how Freddie Mac's weighing in on the housing market. Very brief article, and we probably all know what it's going to say. It's just briefly saying that housing market has slowed down. Sales have slowed down. The amount of refinances are slowing down. Mortgage rates have been rising. That's probably everything's coming together to kind of slow down the housing market, even though we're having by definition, a fairly good economy. If you look at the stock market, the housing market isn't seeing that at the moment. And so it's probably going to continue for the rest of the year, and I would agree with that. All right, our next article comes from Housing Wire, and it's very similar to an article we just covered on Zero Hedge talking about how home sales fall for the seventh consecutive month. Really nothing new to add here. I just wanted to show it that, it's not just one website saying this. A bunch of data at a bunch of different websites are starting to report it. So keep your eye on that. Our next article on Housing Wire is talking about how mortgage applications and refinancing is down. Again, we've already talked about this, so this is another article on Housing Wire basically talking about the same thing, about how refinancing is down and mortgage applications are down. So I think we're definitely cooling down in our housing market here. All right, our next article on Housing Wire is kind of interesting. Mortgage lenders are once again making a profit, but they're actually doing fewer loans. So the previous articles talked about how they're doing fewer loans and fewer refinancing, but they're actually making more money now. So now they're reporting a net gain of $580 on each loan, where previously it was $118 per loan. So what does that mean? It means each loan's more expensive for the borrower. You would think if you were doing more loans that you could do it you'd have economies of scale working for you, so you could do it at a lower price. But if the loan cost is increasing, you're doing fewer of them, then that means you're doing fewer loans and you're increasing the price on the few people that are doing it, which is probably just feeding into why there are being fewer applications and fewer loans, because it's getting so expensive. Mortgage rates are going up. They're still below historical lows, but they're increasing. And then if the cost to do the whole loan process is increasing, it's it's probably going to make it prohibitive for a lot of people that were going to be marginal buyers at best, especially in really expensive markets. All right, the last article we're going to cover comes from Housing Wire, and it asks the question, is the U.S. rental market tilted against low-income renters? A panel of experts explore the issues in a roundtable conversation. So basically, it's talking about how it's becoming harder for low-income renters to find a place because of supply and demand. There are more people searching for rentals right now than there is supply, so that's naturally going to drive the price up. Makes sense, and here's part of the problem, though, is the cost of living has been increasing year after year, but wages have been very stagnant the past couple of decades. So lower income now, it costs a lot more to be a lower income worker now than it did 10 plus years ago. So is it increasing inequality? It's just basic economic supply and demand. It's not like it's some malicious, entity out there like, hey, I'm going to be mean to all these poor people. If you can make the money, if there's enough demand for the price of the product that you're asking for, then that's what you're going to do. Why would you sell it for less if you didn't have to? So just the thing is, it kind of reinforces what we already knew. Prices are sky high for everything, whether you're buying or renting. People aren't making money. You have almost an entire generation stuck in minimum wage or close to a job, working a bunch of different jobs. We're overeducated, have gigantic student loans, and really our future looks pretty bleak for the foreseeable future. I mean, if you're not going to make much money and you've got these loans that you cannot get rid of, you can't declare bankruptcy and get rid of your student loans. Those are forever. It's going to be really hard for you to ever get ahead and be able to rent or buy anything nice. Well, I think that's going to round it up for this week. Nothing super ultra depressing, kind of what we already knew, but not exactly the roaring 20s or anything like that. So just keep your eyes out, folks, and keep watching what's going on. And we'll try to get another episode up next week. And I appreciate all your time. If you have any questions, don't hesitate to reach out to me.